What's going on, everybody? It's your boy C-Zar, and we are talking about Bitcoin today. It is the 19th day of November, and here we are sitting at about $91,780 right now. I got a bit of an interesting story to tell you guys here with Bitcoin, okay? I feel like this analysis in this video is gonna feel like story time. We'll see. I'm just in a storytelling mood, I guess. Hit that like button, subscribe, and let's get into it, okay? By the end of this video, you're going to feel one of two things. You'll feel either complete optimism about the markets or complete depression and fear about the markets, okay? If I've done my job right, or if you're on the same page as me, you should have optimism. But let's paint a yarn, and let's just go over this funny megaphone pattern that we've been in really since July, and we recently broke out. Yesterday we had a good push. And you remember at the lows, well, maybe we weren't at the actual lows, but at like 91K, we were saying if we could push up back above this by the end of the day, that would look really good. Then we have a fake out, right? It's not that we can't push back into it today or next week or at any point in time like that, but fake outs are typically more respected the less time that you spend in the breakout, right? The sooner that you get back into the pattern. They're typically more respected. If this is a fake out, if we're breaking out to the downside, fake outs oftentimes imply rapid recovery to the other direction, right? So like if we faked out to the upside, we'd have a recovery, but to the downside, right? Or a correction, whatever. And what we did yesterday was nice. We had a nice push. We had a nice little push up as if we were getting ready to invalidate this level, but we probably did the worst thing possible. We probably did the absolute worst thing possible, which is we back tested this trend line for resistance. Right? You broke out, back tested it, confirming resistance there, and you move lower. We do have higher lows. We do have volume diminishing. You know, there is still a lot of weak left. And there's a lot of things that we have, but that in itself is not a good look. And if this pattern is true, the measure move that correlates with this pattern, that corresponds directly to where we would go, it's somewhere around $70,000, right? You take the high to the low, you put it at the breakout, that would take us down to about 70K. So far in this story with Bitcoin, we have this massive volatile megaphone pattern, throws people off to the downside and to the upside. You think that we're bearish, we're in a bear market. You think we're bullish, we're in a bull market. And now everybody's really convinced that we're in a bear market. And we have a very certifiable break. We broke out, we back tested it for resistance, and now we're coming lower. There's a little optimism here. But again, the thought is that we go to 70K. That's pretty depressing. What that would imply is that Bitcoin has another 23% to drop. And it's not that this can't happen. It's not that I'm closed-minded to the possibility of this happening. I just can't see it happening. I can't see it happening. Because what this implies is a couple of things. Okay, first and foremost, we'd see a lower low. So then this cycle would be over, right? We'd be breaking serious structure. At that point, from a high to a low, we'd be down about 44%. The average bull market, the average bear market sees diminishing retracements. The very first one was like 96%, then it was 88%, then 81%, then 77%. So likely we see a less than 77% drop. Likely we probably even see a less than 70% drop, if I had to be honest. If this was a bear market, I want to be very clear right now. I don't think this is a bear market. I'm telling you a story. We're going through the dark and scary woods right now, but if you wait, there's a rainbow and a castle with a prince and a princess who live happily ever after at the end of this, okay? I think. Again, it's just a story. But again, if we do this, if we were to fulfill this measure move of this megaphone pattern, I don't know how low we would go. If this were a bear market, I don't know how low we would go. All I know is we wouldn't stop at 44%. All I know is we'd probably go to lower prices. And I can get on board with that if we are in a bear market. But what I can't get on board with, what I'm having a really difficult time getting on board with, is that we're going to see this 22% drop at all, 23% drop, whatever it is at all. Because, and primarily because, if we get back into this pattern at all, that technically makes it a busted pattern. Imagine we had a head and shoulders pattern here, where you have shoulder, head, shoulder, and we break out. You would take the measure move, right? You take, let me take this. I think I have to fix the settings real quick. It's going to be, yeah, it's just going to be an extended line. Let me see. No, we don't want to extend it either way. That's the measure move. You take this, put it at the breakout, and boom, your measure move coincidentally takes you right to this same level that the megaphone has. I think that's just a happy coincidence there. You break out, and here you're like, oh my god, we're going down here. I'm going to max short. That's what's going to happen. But then let's say we find support, and now we're back above the breakout point. This, at this point right here, I don't care if you spent a week down here, at this point this becomes a busted pattern. The statistical probability that you fulfill the measure move goes down tremendously. And typically when you bust a pattern, you actually go to the opposite direction of what the implied breakout was suggesting. So what I'm getting at here is, if we want to avoid going down here, we need to invalidate this megaphone pattern. It needs to become a busted pattern. And that'll happen at any point when we get back above this trend line here. Okay, again, we're shifting. We're now we're out of the dark woods. Now there's a little bit of sunlight. We're still on this muddy path. Okay, covered in dirt a little bit. Maybe we smell of fear a little bit right now, but we can see the sunlight. We're talking about, oh, so all we have to do is get above here. All we have to do is bust this pattern. Right? If not, if we keep validating this, I mean, man, if we get, I would say if we get below, if we get below like these points here, I mean, absolutely at this point, there's no denying we're in a bear market, because then we have lower lows. And again, we likely don't stop, if it is a bear market, we likely don't stop at a 44% drop from a high to a low. That's, a bear market's not that easy. It's not going to be from October to the end of the year 44%, and then boom, now the bear market's over and we're in a new bull market. No, it's not that easy. There'll be bounces along the way, but if we were in a bear market. But what that would imply, again, is that we have to move down here, and we cannot move back into this pattern, because if we move up into it at all, we bust the pattern. And the statistical probability of going down here goes down tremendously. The probability that we don't go down there goes up a good bit. Right now, the probability is tremendous that we go down here based off this pattern. But it all changes if we move up here. And I'm building up to this point where we talk about what we did back here during April 7th, April 9th, this kind of area. We look at our crypto fear and greed index, and we're at a 16 today. We were at a 15 yesterday. The lowest levels that we've seen in this fear and greed index's entire existence, which isn't long. It's only been around since 2023 in June. But still, at least this whole bull market, this is the lowest levels of the fear and greed index that we've seen for the entire existence of this indicator for the entirety of this bull market. We've gotten to the 15 one time before, and here we are hanging out at the 15 and the 16 for 2 days in a row. We might even push lower if we're at these prices today. I think this is important because the last time that we saw these levels of fear, we were all the way down here at 74K. Again, the last time we saw the same levels of fear that we're at right now, the same exact levels of fear, we went on a run that took us to 121K from 74K. Now imagine we saw that same run here. I'm not saying that we will. I actually think we'll run. It'll be a bigger run and it'll be a faster run personally. But we would get to 140K by February. And maybe we get there by February. Maybe it takes that long to get there. I would think this next move is going to be bigger. I think this last move was weak. And maybe there were reasons, inside reasons that were unbeknownst to us that are coming to light now, but I'm getting on a whole different page. The thought here is, what if I'm wrong? What if I'm wrong and we have the same levels of fear here that we do here, and instead of this massive push up, we only get a little push up, right? We're still going lower, quote unquote, but we need a little bit of volatility, right? It's like here, when you're in extreme greed, was this the end of this move? No, you kept moving up, but you had to consolidate first, right? You had to consolidate first, and then you moved up higher. When we had extreme greed here, was that the end of it? No, you moved up first, or you moved up more, but you had to consolidate first, right? So if we are moving lower, but we have to consolidate first, that would imply then that we move in the opposite direction. Well, here's the deal, right there. If you're acknowledging this, there's two thoughts here that if you're bearish, you have to come to grips with. Okay, one, we're very fearful, the most fearful we've been this cycle, and the thought here is that we're only going to keep going down. We're not going to bounce here because a bounce here would mean that we get back into this megaphone pattern. It would also mean, I think, let's just see. Why isn't it showing? There we go. The 50-week moving average is at 102K. We would stand a chance at crossing back above that 50-week moving average if we get back into this pattern. It's something to think about, okay? Just imagine here, because 102K, I'm getting distracted, but it's 102.7K from the current price is about 12%. And the last time that we were this fearful, the initial bounce, not even the overall move, but the initial bounce that we got was 50%. So a move that is about a fifth as big as what we had last time that we saw these same readings is all we would need to cross above the 50-week moving average. Okay, so again, as a bear, I'm going all over the place, but I promise you I'm going to bring it back. As a bear, you have to kind of accept two thoughts here. One, we're at extreme levels of fear, the lowest levels of fear that we've seen this whole cycle, okay, consistently. And we're going to go lower because we can't break back into this pattern and still go lower, right? We can't do that. Or if you're a bear, you have to accept that, okay, it makes sense. We're at extreme levels of fear, the most extreme levels we've seen all cycle. It makes sense that we should get some volatility here. Maybe we move up, we get a lower high, and then we move back down. But hold on. I think both of those thoughts are kind of improper. They're not logical. Here's where the sunshine comes out. Here's where we start to see the golden brick road, whatever it is. If you're a bear, illogically, improbably, statistically less likely, you would think that we go lower right now in lieu of how fearful we are. We can get more fearful. It's not that we can't. That would be a pretty intense drop. This is already one of the fastest drops that we've had all cycle. From a week perspective, from a time perspective, from a high to a low, we have not seen something drop this fast, down 30% from a high to a low. There was one other drop that was a little bit faster, and that was right here. That was this. Other than that, this is one of the fastest drops this cycle. And we're going to drop more. We're going to drop significantly more. What happens? Let's say that we even drop down to 82K, and we continue to get less or more and more fearful. At some point, we're going to bounce, and the bounce again will likely be more than 10%, right? Even if we dropped all the way down to 83K, 84K from here at areas where we found support before, the likelihood that we would bounce, we would recover and break back into this pattern, it's still there. So even if we get more fearful, we push from here, which is pretty improbable because, again, we are at some of the most fearful levels this cycle. Even then, we still have a solid chance of breaking back into this pattern and invalidating the move overall, right? Or the other illogical thought. So right there, in my opinion, that makes it illogical to be a bear, or at least to say that this is a bear market, because if we go down but we come back up and break back into the pattern, the statistical probability of going down here diminishes greatly. And that's what you need. You need to take out this low in order for this to be a bear market. Until then, we still have higher lows. We're still in a bull market. Or the other illogical thought, which I think is more logical, it's illogical if you stick to the bearish case, but it's logical. It's more logical as far as what the thought process is. Here's the thought process, is that we're at the lowest levels of fear. We're going to bounce to some degree. Last time it was a 50% pump. Are we going to get a 25% pump, a 10% pump, a 5% pump, a 4% pump? Any of those are going to get us back into this pattern, let alone if it's the same size or bigger. What if it's bigger? We have the same stuff going on here right now in the RSI. We're at the same levels here. Actually, I guess we're a little bit lower, aren't we? Let's see. Yeah, we actually, with last week's close, we actually closed lower than any of these levels. We're at lower levels in the RSI. We have lower lows with higher lows in price. It's hidden bullish divergence, and we're basically at the same areas virtually that we have been every single time we found support this cycle in the RSI. We're at the exact same levels that we found support every single time in the stochastics this cycle. Okay, every single low was at these oversold zones every single time. And again, we have lower lows here, but higher lows in the price. It's hidden bullish divergence. And the MACD, all on the weekly time frame, the oscillators are at the same levels. The histograms are at the same levels as we were at every single low. And we have the fear and greed index. The only thing that you have bears, the only thing that you have maybe two things. If you're a pattern trader, you have the break of this pattern for now. The only other thing you have is the 50-week moving average, which again, from here, would not be that hard to replace, would not be that hard to supplant. We could definitely see from here with these levels, the same levels that every single time we've had a bounce that was certainly greater than 12%, 13%. We're seeing the same indications now. We would, from the recovery, from I think a standard recovery from here, logically thinking, we would not just bust back into this pattern and bust the megaphone pattern overall, thus making the statistical likelihood of going to 70K a lot more improbable. But we would also likely get above the 50-week moving average, and then what? And then what? Then what do the bears have? They have a busted bearish pattern. That's not good for them. And then we have the 50-week moving average, which you close below greatly, and it's not a small close, right? It's not a small endeavor. Like here, we kind of closed below it. So when we closed above it the next week, you could get excited, but it's still dicey, right? Whereas like here, this is a little bit more. So when we closed above here, we got a little bit more excited. We thought, okay, maybe the bull market's back on, and that was a little bit of a lie. It's not that it can't lie to us, but again, if we get back up here, statistical probability that we go down here goes down tremendously, which means we're likely not going to take out this low, which means we're going to have a higher low, which means we're still technically in a bull market, and then we're back above the 50-week moving average. Are you still bearish? Is my question. How are you still bearish at that point, right? At this point, right, everybody, all the trolls, all the haters, all the bears, they're coming out of the woodworks and they're saying, okay, so now that it's broken, are you going to take it back? Are you going to say that we're not moving to 70K? Well, no, it's a possibility. I accept that it's a possibility. But what I am saying here beyond the pattern, if we're taking everything else away, is that we are at these extreme levels of fear. With our indicators on a weekly time frame, we have the same indications, and even better, actually, we're cooled off more than we have been this whole cycle. We're at the same readings on all three of these significant indicators on a significant time frame, like the weekly time frame, that we found lows throughout this whole cycle. If we bounce, if we bounce back into this range, the statistical probability of going down to 70K diminishes greatly. The statistical probability of us forming a bear market diminishes greatly. And the statistical probability that we break out of this pattern to the upside goes up. So if you're bearish here, again, there's two lines of thought, just to complete it, in case anybody missed it, what I'm trying to say, right? It's a whole story. And I've completed the story now, but if you missed the moral, let me say it again. If you're bearish and you're thinking logically, right? There's probably two methods of approach here. One, maybe three. One, you move up, you get a lower high, and then you move lower. Two, we just keep moving lower. Or three, maybe we move sideways, and then we move lower. We consolidate, we move sideways like we did here, right? And then we move lower. Well, every single instance here is just statistically improbable. It's very unlikely. Because of the levels of fear that we have. Because what? We're going to just bounce a little bit, get rid of this fear a little bit, and then we're going to come roaring down to 70K. We're just going to keep pushing here when we're at the most fearful levels that we're at now, and roar all the way down to 70K without any kind of significant bounce that we've seen every single time this cycle with these same indicators on the weekly time frame and the fear and greed index. Or are we going to move up? We're going to bust this pattern. We're going to bust this pattern, statistically validating that this was a fake out and that we likely don't break out to the downside, and then we're going to go down to the downside. None of it makes sense. None of it makes sense at all. What makes the most sense to me is that the market is highly irrational right now. This is a great time to buy. We've dropped 30% from the high to the low, and it's time to party. That's what makes sense to me. If you're not buying here, you will regret it in a matter of probably a month and a half. I would bet by the end of the year, every single person who's either selling here or not buying here will regret it by the end of this year if you have the opportunity to. In other words, what I'm trying to tell you is if you're not buying here, you're only going to be buying at higher prices from here on to the rest of the year. So I got nothing else to say I hope you enjoyed story time with C-Zar. Hit the like button, subscribe. Thank you all for being here. Again, in case you missed it, the bears have three paths that we could go on. Recovery, a little relief rally, lower highs, and then we go down. But again, we do that, we're breaking back into this megaphone pattern. We're invalidating, we're making it statistically improbable that we go down to 70K. We're getting a fake out of a very massive multi-month pattern. We do that, we're recovering to any degree off of our fear and greed. The last time that we did this at these levels, we saw a 50% pump in a very short amount of time. Imagine we pump 50% from here. We're back up at 116K. How much would it be, actually? A 50% pump from here would be a little bit more than that, I think. Sorry, it would take us to new all-time highs. Sorry, that my brain farted out there. New all-time highs. What if we saw half of what we saw last time? Even a 25% pump. Imagine we're back at 115K. How bearish are you going to be there? After all this turmoil, after all this negative news. That's another thing too, guys. The news, I said crypto new. Crypto new. I want the new crypto. I want crypto news. The news is bearish. The news is just tremendously bearish. Every single thing is bearish. Actually, it looks like some of this is kind of bullish. Latest crash. Yes, reveals who pays the crash for the failing economy. Who pays the price? It's going to be you. This is you. The Guardian is telling you it's going to be you, the little guy. You're the one that pays the price in this economy. The big dogs are making money. They're making it at your expense. It's political propaganda. And it's psychological warping to make you, the little guy, not want to invest because you're the one that gets hurt. But really, it's propaganda, propagandizing against the current administration, and then also preventing you from actually getting in at a great time to make wealth, or convincing you worse to sell at a loss at the worst time to sell. On the bright side, you get tax write-offs. There's all these negative stories on the news. And again, as a bear, I think a logical thought here would be that you at least bounce and get a recovery, a little sigh of relief. But then again, at that point, we validate this as a fake out. If you're bearish, the only other path that you have is down or sideways. We move sideways long enough, like we did back here, and we're back into this pattern. So again, same kind of case in point. Or the least likely possibility is that we just keep moving down into this fear when we're at extremely oversold levels on all of our weekly indicators. And again, even if we did move down, we likely don't push all the way down to 70K. What are we going to do? Push down to 78K? How much of a bounce are we going to get from the extreme levels of fear, from the extreme readings of oversold? How much is that snap back going to be? Is it going to be 20%? That's less than half of what we saw last time. That still breaks us back into the pattern. No matter what you do, you can't escape the reality that you're going to miss your measure move, that we're going to hold a higher low, that we will prevail. And once we're back into this pattern, the probability of going to new all-time highs is it's extreme. I don't have anything else I want to say. I'm going to end it there. Hit the like button, subscribe. Thank you all. Take care. Bye-bye.